there, fellow traders. Welcome back to Insider Financial. I'm Alex Carlson, and in this video, we will recap the day's stock market action and discuss our game plan for tomorrow. But before we dive in, to get our market-moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on insiderfinancial.com. After you sign up with your email, you can then sign up with your mobile number. Text messages are the fastest way to get our alerts, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1+ area code and number. Never begin the format with 0, it will not work. And after you sign up, you'll get a welcome email, which includes a free copy of our ebook. Our ebook, our email service, and our text messaging service are all free service from Insider Financial. We don't run any paid subscription service whatsoever, no Discord rooms or Telegram chat groups. Well, guys, the Santa rally is in full effect. The S&P 500 is just 30 points shy of its record closing high. This is all Fed related. As they say, don't fight the Fed, and the Fed has been choreographing the Fed pivot with interest rate cuts coming next year. Bonds have risen and yields have come down. Just look at the U.S. 10-year 10-year yield. It's come down from 5.02% to 3.9%. This is an unbelievable move. And as a result, it's been risk-on sentiment with the shorts getting squeezed in some of the most heavily shorted names. Carvana, 34% of the float is short, has run from $29 to $60. It's a double. Affirm, 21% of the float is short, has run from $15.97 to $50. The stock today was up over 15% after the company said it would expand its pay over time options to the self-checkout lanes of over 4,000 Walmart stores in the U.S. The move comes just a day after Morgan Stanley downgraded the buy now, pay later service provider stock on concerns that its recent rally was overdone. These analysts, I think of is the line, Gordon Gekko line from Wall Street. You know, these analysts, they don't know preferred stock from livestock, and you always take it with a grain of stock, a grain of salt of what they say. I'm going to talk about a few analyst upgrades that we will consider, but again, focus more on earnings, focus on the overall market conditions, short squeezes, low floats. That's what's working right now. UPST, 43% of the float is short. The shorts have just gotten absolutely annihilated in these names. But my only concern right now, guys, and this is, as we head into the new year, again, we're at extreme greed levels. Tonight we got bad news from FedEx. The company missed earnings. The stock was trading lower after missing estimates on both lines of its fiscal Q2 earnings report and setting revenue guidance below expectations. The Memphis-based shipping giant reported revenue fell 2.6% year over year to $22.2 billion versus $22.4 billion consensus. Operating income was $1.42 billion versus $1.49 billion consensus and $1.21 billion a year ago. Operating margin rate was improved 6.4% to versus 5.3%. Cost per package declined 2%, driven by lower line haul expense and improved first and last mile productivity. Here's the key. Looking ahead, FedEx sees revenue falling at a single-digit rate in fiscal year 24 and EPS of $17 to $18.50 versus $18.22 consensus. The shipping giant expects to buy back $1 billion worth of stock in fiscal year 24 and sees capex spending of $5.7 billion. So the stock closed today at $280, was trading $252 in the after hours. FedEx might actually use some of its share repurchase program to buy the dip tomorrow, so we'll be watching for that. I think there's going to be some trade opportunities in FedEx, so I'll be watching this closely. FedEx again ranks third in the U.S. for deliveries behind Amazon and UPS. UPS and Amazon will both be on watch. The Fed really, Fed Chair Greenspan, former Fed Chair Greenspan, he used to say he really watches FedEx closely because it's transportation, shipping. It's a real sign of the overall health of the overall economy. And this is a sign that there is concerns that, are we going to have a recession next year? Is it going to be a soft landing, hard landing? Right now, the narrative is a soft landing. So let's see how the markets react. But again, I still think we're going to squeeze higher into New Year. Once the New Year comes, that's when things could really change on a dime. I think right now, as I said, fear and greed index, extreme greed right now. Everyone is extremely bullish right now. You just look at this extreme greed. This is one of the top indicators right now. So this is, when I say top indicators, contrarian. So again, this is something that I would say looking at getting a little bit cautious going forward. But a couple of new names to add to your watch list. LQDA, $11 million insider buy. AGAE, a $400,000 insider buy. MRAI, a $300,000 CEO buy. OCUL, a $5 million insider buy, and OLMA, a $3 million insider buy. We also got WVE. We got a $12 price target. Stock closed at just $4.97. TVTX, $23 price target. We also got Stifle. They adjusted their target to $10 from $8, maintains hold rating. This is another analyst, though, that put out the $23 price target. Nova, SunNova traded closing at $15.14, but got a $26 price target. So solar names, a couple of analysts are coming out about solar names saying that they really got hit with the Fed tightening, with the Fed looking to loosen next year. These could be some of the biggest beneficiaries from that. But this is what I have on my watch list. Again, it's the end of the year. Right now the trend is higher. So, it's really tough to put on some new positions here. Just sort of ride the trend here into Christmas and the New Year. I will also, of course, be scanning pre-market. If I see anything new to add, I will let subscribers know. So make sure you sign up. If you also notice, my charts look different tonight. I'm using an EMA cloud strategy that I will discuss in a future video. So make sure you hit the subscribe button. And here at Insider Financial, we put stocks on your radar with potential outsized moves. As I have repeatedly stated, there are always opportunities in the markets daily. The important thing is identifying which stocks to be in to grab that money. The key is trading green, not red. We are looking for those momentum plays that have catalysts. It's all about finding momentum before it happens and riding that wave. That's what we're doing here at Insider Financial. To get our small cap reports, we cover low float, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks, and insider buying. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. No spam. Your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at Insider Financial and unsubscribe. And some of these stocks are making big moves pre-market. If you want to trade from 4 a.m. to 8 p.m., click our referral link in the description for Webull. Open an account and deposit any amount and get 6 free fractional shares, each valued between $3 and $3,000. Remember, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinion, is meant for informational and educational purposes only, and does not provide investment advice. Past performance is not indicative of future performance. Thanks for joining me today on Insider Financial. Hit that subscribe button and ring the notification bell to never miss the latest insights and strategies. Until next time, happy trading. This is Alex Carlson signing off. Bye-bye.